Welcome back to Explain the Charts, everyone. Today, September 11th, 2025, we're diving deep into Google, analyzing how recent news and events are shaping its impressive chart action. Google stock has been on an incredible run, particularly after a landmark federal antitrust ruling earlier this month, pushing it to an astonishing $241.815 at current market open. The daily chart, reflecting yesterday's close at $239.17, immediately reveals a robust uptrend, positioning the stock at fresh all-time highs. The most significant catalyst was the September 2nd antitrust ruling by Judge Amit P. Mehta, which was largely perceived as a monster win for Google. The judge allowed Google to retain its crucial Chrome browser and avoided mandated divestiture, a huge relief for investors. Looking at our daily chart, you can clearly see the massive upside gap on September 3rd, where the stock opened at $226.21 after closing at $211.35 the previous day. This significant jump, fueled by a staggering 103 million shares traded that day, perfectly illustrates the market's positive reaction to the ruling. A major reason for this favorable outcome was the judge's acknowledgement of generative AI as a potential competitive threat, easing regulatory pressure on Google's search dominance. Google itself is heavily investing in AI, with its AI overviews driving millions of new queries and the integration of Gemini expected to further boost its search business. This narrative of AI-driven growth, coupled with the antitrust clarity, is a powerful long-term bullish signal. Analyst sentiment has also turned overwhelmingly positive, with some predicting Google could reach over $320, adding $1 trillion to its market cap. However, it's important to note the lingering concern of a separate U.S. court verdict due September 10th concerning online advertising monopolization. While the market seems to have shrugged off this immediate risk, with Google continuing its ascent, it remains a factor to monitor for potential future volatility. Now, let's zoom into the 1-hour chart to understand the more immediate price action leading up to and after this major news event. Here, we can observe that Google was consolidating in a range between approximately $206 and $214 during the latter half of August. This horizontal channel represents a period of uncertainty before the antitrust verdict. The moment the news hit, depicted by the sudden upward surge on September 2nd to 3rd, the stock decisively broke out of this consolidation. Notice the strong bullish candles and accompanying high volume during this breakout period, indicating strong buying interest. After the initial explosive move, Google entered a new phase of consolidation, but at a significantly higher price level, suggesting a new support floor around $230 to $232. This behavior is typical after such a large gap up, as the market digests the news and establishes a new equilibrium. Moving to the 15-minute chart, we gain an even finer perspective on the most recent trading sessions. From September 8th to September 10th, we can see Google has been in a slight upward channel, forming higher lows and higher highs. The price action on September 10th shows some intraday volatility, but consistently found support above $238. The very last candles on this chart, ending at 23:52 Universal Time, coordinated on September 10th with a close of $239.75, show steady gains. This suggests the positive momentum continued overnight, leading to the current market price of $241.815 observed today, September 11th. However, keep an eye on volume. Any significant drop during an upward move could signal waning buying pressure. Let's return to our daily chart for a broader view of key support and resistance levels. Since Google is at an all-time high, traditional resistance levels are absent, making price discovery a key dynamic. The first critical support level to watch is the psychological $235 mark, a level where price has shown some minor reactions recently. A much stronger support, the bottom of the September 3rd gap, lies between $225 and $226. A retest of this gap and a subsequent bounce would be a very bullish confirmation of this new price floor. Further down, the pre-gap resistance at $210 to $212 now acts as a substantial long-term support level. Now, let's weigh the reasons to be bullish on Google. The recent antitrust victory has significantly de-risked the stock, removing a major overhang that previously kept its valuation lower compared to peers. Google's strong position in AI, demonstrated by increased search queries and new product integrations, is a powerful growth driver. The company's robust fundamentals, including consistent revenue growth and profitability across its Google services and cloud segments, remain compelling. Long-term, the potential for a re-rating of its valuation multiple, aligning it with other tech giants, suggests substantial upside towards or even above the $320 mark. On the flip side, what factors could make us bearish or cautious? In the short term, after such a rapid ascent, the stock could be due for a period of profit-taking, leading to a temporary pullback. The ongoing antitrust case concerning its online advertising dominance, with remedies still pending, presents a future regulatory risk. Increased competition in the AI space, with companies like Anthropic and potentially Apple eyeing Google's territory, could impact future market share. Furthermore, the stock is currently trading in uncharted territory, meaning there's no historical overhead supply to contend with, but also no clear resistance points defined by prior price action. This can sometimes lead to sharper pullbacks if momentum falters. When considering trading Google at these levels, it's crucial to adopt a multi-timeframe approach. For short-term traders, watching the 15-minute and 1-hour charts for intraday support bounces or signs of exhaustion at new highs is key. Scalping for quick gains or losses at these micro-levels requires extreme discipline. Medium-term traders might look for a consolidation pattern to form around current highs or a retest of the $235 to $226 support zone as an entry point. Volume confirmation is vital. Strong buying volume on rallies and diminishing volume on pullbacks indicates healthy price action. For long-term investors, the removal of the Chrome antitrust threat and the strong AI narrative provide a solid foundation. However, dollar-cost averaging into a position or waiting for a more significant pullback to key support levels like $225 to $226 or even $210 to $212 might offer a better risk-reward. Let's recap the important price levels and predictions. The all-time high of approximately $241.815 is our current resistance in this price discovery phase. Immediate short-term support sits around $235. A very strong support level and potential buying zone is the $225 to $226 range, representing the bottom of that massive gap up. Longer term, the $210 to $212 area offers robust support, marking the prior resistance breakout. For predictions, a continued upward trend is moderately likely, around a 65% chance, especially if the overall tech market remains strong and no significant negative news regarding the ad monopoly case emerges. This would be reinforced by sustained high volume and consecutive daily closes above $240. A retest of the $225 to $226 gap fill support is also moderately likely, about a 55% chance, due to natural profit taking. If this level holds, it would confirm the strength of the bullish move. A deeper pullback to $210 to $212 is less likely, around a 35% chance, without a major negative catalyst, such as an adverse ruling on the advertising antitrust case or a broader market correction. In such a scenario, that $210 to $212 zone would be a critical area to watch for a potential bounce. Finally, keep an eye on upcoming news, particularly any updates on the advertising antitrust case and Google's AI development announcements. Monitor trading volume. Increasing volume on dips could be a bearish sign, while increasing volume on rallies confirms strength. The broader market sentiment towards the Magnificent Seven stocks and the AI sector will also heavily influence GOOGL's trajectory. This is Explain the Charts, and we hope this in-depth analysis helps you navigate the exciting movements of Google. Trade smart, stay informed, and we'll see you in the next video.